Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.
Friends, this is for sure a reality that trading is not just about strategy. It's actually about mindset. It's about your personality. It's about your ability to manage your emotion. It's about your performance management. Just like a typical sports person, every sports person has a team, has an army of people supporting that sports person. And one of the critical team member is a performance coach who takes care of performance of that person, not literally, but in terms of managing the mindset of that person. I today interacted with a performance coach who is helping traders to excel. He has rich experience of market as a trader and eventually has decided in his older age to become a performance coach. This face-to-face global is going to give you a perspective about how to become a solid, mentally strong trader, which is the most essential part of doing successful trading. So let's welcome for this face-to-face Stephen. Hello, Stephen. Welcome to Face to Face Global. How are you doing?
Pleasure to be here. Pleasure to be here.
So excited to learn from you. You have rich experience of market, and you are also a writer, author of a beautiful book, and also you are guiding people to become a sensible market participant. So I'm very, very excited that I'll derive the pearls of wisdom from your rich experience of market.
Okay. Thank you. Pleasure to be here.
Thank you, Stephen. Stephen, the format is that first 10 minutes or so, we want to know more about you and your journey. Let's start from your college days. What did you do? How are you as a person in college, and what made you come to market and doing what you are doing right now? And then we go into, today I want to do a very 360-degree discussion with you where we'll talk about a lot of things and also obviously how to prepare mentally to become a better trader. So let's start about you first. Please go ahead.
Okay, so well, I'm probably a little bit older than many of your viewers. So I started out in trading in the mid 1980s.
Wow.
It wasn't really that common for people to go to college in the UK in the mid 1980s, unless you were going into a certain profession, such as medicine or law or accountancy, or had a particular passion to follow a particular field of study. So it was a different time there. A lot of people at that time sort of completed their school years and then went to work, sort of straight from school. So my initial work was working in a local bank branch, not far from where I live. And then, I kind of got a little bit bored of that very quickly. And living in London as I did, it's probably quite fortunate to be in one of the major financial centres of the world. Really, at that point, was probably London and New York, with maybe a little bit in Hong Kong and Singapore, and some other sort of capital cities in the West. But generally, it was London and New York were the two major financial centres of the world. So the financial markets were really just opening up then. Even here in the UK, they'd been sort of closed and restricted. There was the stock market, but it was very much a closed market. It was traded on the floor, sort of on the stock exchange floor. And it was kind of another era. In the early 1980s, we started to have a liberalisation of our financial system and our economy, like many countries did in the 1980s around the world. And that gave a sort of springboard to lots of different areas of finance opening up, and really the whole field of trading as we know it today really started to expand here in the UK, in the US as well. They'd gone through it a little bit earlier than us, so they were a little bit more advanced, but still sort of late 1970s, early 1980s. There was always some markets, but they were pretty sort of closed and restricted up till those periods. And as the market started to open up, The banks started to become involved in them. They started to build trading rooms. They needed young trading talent. So being a young person in London at that point and hearing stories from people my age, sort of late teens, early 20s, getting jobs in the city of London, really exciting, really well paid, and it was kind of like an open field for almost anyone who wanted a sort of chance their arm. So I landed at a Japanese bank in the mid 1980s. I didn't know what I was doing. I don't think they knew what they were doing. Everyone was kind of making it up as we went along. And that was pretty much a fair description of the financial markets in the late 80s, almost through to the early 90s, you could say. Some people were a little bit more experienced than others. A few people had mentors, which kind of helped. You learned from them. But I often feel we were all making it up as we went along. And it wasn't a surprise that some of the big financial frauds and financial disasters we hear about in those days, sort of now, such as Barings banks and LTCM, although that was a few years later. You could almost go back to the seed of the fact that these were very raw times, almost like the Wild West. There wasn't really a strong system of governance, both internally in companies and externally from the authorities. So it was a vibrant time. You could really learn from it. And you kind of found, if you survived the first 2 or 3 years intact, you kind of had your feet under the table, and then you could move on to another job, learn from new people and go through that. So there was this kind of rich learning experience. You just learned from other people. You were doing it in a different way. You were doing it in what we call the sell side. So you're working for a bank that were market makers, that made prices, that sat between what you would call, if you were to think in terms of commodities, you have a producer, then you have the customers. The sell side sits in between. It's the way that the producers distribute their product to the clients, the way the clients are able to access their products through that market making area.
Okay.
The sell side. So you learn to be a trader within that, which is a very different sort of trading experience to the way your customers will be, your view, your people, you watching this will be learning, and the way they will be doing it as well. We are doing it inside the system. If you've read the book, you'll see that I use an analogy of a casino to try and sort of separate those two types of trading out. You're either the house, the casino, playing the game with lots of people coming to you. That's what it was like being on the inside working for a bank. That's what it's like being on the inside of any market. You see lots of flow, lots of client orders. You see stuff that comes from a producer. You kind of get an inside track on the market. That doesn't mean you're insider dealing, but you really are swimming very in the waters at the center of the market. There's a lot of richness to be harvested from that, from being there. The prop traders are sort of people you're speaking to. They can't really be doing that. They don't have the endowments that being there has. They're the other side in the analogy of the table. They're the players. They're turning up to play at the casino, the blackjack table, where the odds are tipped against them. Right? And I could talk about that a little bit later on, but just to understand that I was on the inside learning the game there. And you learn to play a different game, and I learned to play it there. I did arbitrage. I did what was called relative value. I did position trading. I managed a book, so you saw flow going through your book, and you positioned around that. And you're trying to anticipate the liquidity of the market as well as the price action. The ebbs and flows of markets from the inside, and that's kind of how you learn the game outwards. I then moved to a small Norwegian bank for a couple of years in London. Then I moved to a large Swiss bank, Credit Suisse, where I really started to learn to become a trader there. That was kind of sitting down playing with the big boys. And I actually adapted my game because of some internal circumstances. Trade probably more like your customers, to become like we call a buy-side trader or a proprietary trader. Using setups. So I started to adjust my style to the other side of the table. using specific strategies, setup strategies.
Okay.
And I did that internally. And then they moved me to a proprietary trading desk where within the bank, where it was a desk where you didn't have flow, or you didn't have clients, you didn't have customers, and you just had to make money from the market without any flow. So it's still a little bit inside the system, but not using the full advantages that came. And I did that for a number of years. Then I moved to a German bank called Commerzbank. And again, I kind of traded both ways a little bit, both inside the system and outside the system. There was a lot of politics in that place. I didn't really enjoy my years there, but I was there for 7 years. And halfway through that experience, I had one great advantage. I had the option to go into a coaching program to work with a performance coach, a leading performance coach, who'd done a lot of work in the financial markets. And he wasn't from a trading background, but he was very good at working with traders, at helping them to understand themselves, to see their situation, see their context. And that experience really changed me. For the first time in my career, I started to look at myself rather than look outside of myself for the answers, because trading is a struggle. It's a very traumatic experience.
Yeah.
For people, you're exposed to a lot of failure often. You end up doubting yourself a lot of the time, and you end up feeling foolish a lot of the time. Markets make you feel foolish.
Yeah.
So going through that coaching experience really gave me a chance to look at myself and start to understand myself in far more detail. And I came out of that, and my trading was just at a whole different level. I kind of look back at my trading, and this is something I try to tell people when they do this job. Okay. For many years, I would consider myself an analyst who tried to predict where the market was going and took risk in the market. Okay. In the years after that, I looked at myself as a risk taker who used analysis as one of the tools in my job. Now, it took me 13 years to realize that. Okay. And everything changed after that, because this job is risk taking. Never going to succeed if you're not thinking about yourself as a risk taker, managing yourself as a risk taker, developing yourself as a risk taker, building a risk taking process that has risk management built in, as well as strategies and tactics for taking risk. And the years after that, I moved on to the banking arm of American Express, where I was a proprietary trader. They didn't really do proprietary trading in their business, but I kind of had the license to do that in a part of the business I was at. Okay. And those years went spectacularly well. For the first time, I would say I was really an accomplished trader.
Okay.
And then 10 years after the coaching, I had a chance conversation. So I was at a bit of a crossroads after the financial crisis. American Express sold its banking arm to another bank. They really didn't want to do proprietary trading in their London office. So I had to look for another job. I went back to my coach to sort of, the plan was that he could put me in touch with some hedge funds who maybe I could do the job there.
Yeah.
But he talked me into becoming a coach, and I fell in love with that idea. There was a little bit of an element of 25 years doing this job. It's a wonderful job, but it's a very stressful existence.
Yeah.
And there's part of me that, I could go into my later years perhaps and do something different. I assumed I would carry on trading in the background privately rather than for anyone. But as I got busier and busier with that, I found it hard to juggle those two jobs together. I still do trade a little bit, but it's a hobby. It's very small. I maybe take a dozen trades a year in the style that I used to take them in the past. But it's just something I do in the background occasionally. It's very hard to really stop fully. But this is what I do now. I coach traders, and I've coached traders right across the spectrum, from all markets, from relatively young traders, in their early years trading, who've got at least got some sort of background already. They've had 2 or 3 years learning the technical and fundamental basics of the job. So now I start working with them. They come to me to help them sort of move on to the next level. And my clients really go right up to the spectrum, where I've got clients who are partners in major hedge funds who'll be doing the job more than 30 years, and everything in between. So, that's what I do now.
Lovely. Fantastic. If you don't mind, can I ask you what's your age?
I don't mind at all. I'm 60.
Oh, that's amazing. I'm not
I still
surprised.
consider myself young.
You still are very young. Yeah, you look like. Good. I think I'll probably do my first face-to-face with a performance coach, because I have not done this with anyone earlier. I've obviously interviewed 260 people. Most of them are either now full-time investor or trader, but you have been there, done that, and now you have a much larger responsibility, is to take care of multiple people and their emotional outburst and mental, equanimity. So I'm very excited to learn the micro aspects of performance coaching for traders. That how do you actually figure out what is the right thing for a particular trader, because you interact with so many people, so many hedge fund managers or traders, so everyone is individual. So I would love to know about your template, which you use to guide them, to kind of advise them in their journey. But we'll do that in the main video, which is the next video. So for that, my learners have to visit again on this channel on Friday 5 p.m., which is my time, which I've blocked for everyone. Guys, this is going to be very different interaction. This is not the run-of-the-mill strategy discussion where we're going to learn MACD, moving average. This is going to be serious stuff where you will actually learn what is behind, which is actually the core of what is at the front, right? So let's meet tomorrow at 5 p.m. See you, Stephen.